Yo, what's good, YouTube? Today I'm gonna just show you guys how to make $100 per day in the stock market. The saying "it takes money to make money" is true. It's somewhat true. Let's say you have $1,000, right? 10% of that $1,000 is $100. So all you will have to do is place a trade. All you need, just good setups, get in at good positions, have a good strategy. Stock that you're trading, all you need that stock to do is go up a certain amount just in order for you to make 10%. Once you make 10%, get out the trade. Wow. Not even that. You don't even need to trade with $1,000. You could trade with $500, $700. A good setup, once you hit your price target, which is $100, no matter what the percent is, take out, make $100, easy. Know how to manage your risk. Yeah. And another thing, like technical analysis, gotta know how to do technical analysis if you want to be successful in the stock market, trading anything. I'm gonna show you guys everything I'm doing on the phone. I'm gonna break it down to you guys step by step on the things you need to do in order to make $100 a day. So the app that I used to trade with, I'll say it again, is Robinhood, right? This is the app I use to place all my trades. So what I would do is I would have my chart pulled up. I would know what type of trade I'm trying to place, either a call or a put, and have all that set up. And then I would come to my phone and hit trade option, right? So let's say I have everything set up. I want to place a call. So I would come here, right? I would come here, I would trade, hit trade option, and then here on my phone, you see it looks crazy, it looks complicated, but trust me, it's really easy. It's really easy. So at the top, what you would do is you will pick your expiration date. You got January 17th, 18th, and so on. So if you're day trading, the expiration date that you have is that same day, which is more riskier because there's a chance that you're like that you could lose like everything and not be able to make it back because your contract expires in that day. So that's why it's best if you're day trading to try to get out the trade as soon as possible, because the longer you hold the trade, the more worthless the trade becomes. So what you want to do is, it's real simple, trust me. Everything sounds complicated, but yo, it's really simple. Once you get the hang of it, you can understand it just like that. It's easy. So you have your certain amount, the amount you want to trade with, right? Then what you would do is come here, either put an in the money contract or out of the money contract. So in the money contract is anything for calls. An in the money contract will be anything that's below the price. Okay, so we can see here the price is 475, right? So anything that's below 475, any strike price that's below 475 is an in the money contract. So anything above that is an out of the money contract. If, like you say, you want to keep making $100 a day, 100, right? The big thing is trading psychology. You want to be able to control your emotions while you're in these trades. Because let's say you're in a trade, you think it's a good position, and you get rejected, like the trade isn't going your way. Then you have to know how to manage your risk, have good psychology, know how to control your emotions. Because sometimes, like, I'm speaking from experience, sometimes you're in a trade and you really think it's going to go a certain way and you get stopped out, but then in your head you're thinking like, nah, this stock is gonna come back down, but that doesn't happen. It just keeps rejecting you, going in the opposite direction, and then you just get stopped out. Massive loss, all because you thought the stock would come right back down. So you got to respect your stop losses. If you don't respect your stop losses, you're going to blow up these accounts. Even when you're up a certain amount, don't think, it's gonna keep going up, it's gonna keep going up. Because then again, that's when a winning trade could turn into a losing trade, because you think the stock is gonna just keep going up, keep going up, keep going up, but it doesn't. You think it's gonna keep going up, right? And then it starts rejecting, coming down, and the price never goes back up to that point. So you just turned a winning trade into a losing trade. You don't want that to happen. So to avoid that from happening, what you want to have a price target in mind, a realistic price target in mind. Like $100 is a realistic price target, depending on how much you're trading with. A certain amount, it goes up to $100, no matter anything else, no matter if you think the trade is going to keep shooting up, no matter if it does keep shooting up. Once it hits your price target, get out the trade. That's how you have to respect your game plan. If you don't respect your game plan, then that's when I feel as though it's getting into gambling territory. If you respect your stop losses, respect your everything, you will be profitable. It's more likely that you will make $100 day by day by day by day by day. But you can let your profits go higher. You could choke the price point, which simply means if the price keeps shooting up, you move your stop loss higher and higher. You move your stop loss to a point where your trade will not be a loss. Your trade will just be either break even or a profit. You move your stop loss all the way up to where it's no way you can lose money from the trade. That's called letting your winners ride, which you can do that as well.